Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Monday, August 3, the EURUSD pair rebounded from the 76% Fibonacci retracement level at 1551. Reversed in favor of the US dollar, and declined toward the 61 Fibonacci retracement level at 1507. A rebound from the 1507 level today would favor the euro and support a resumption of the upward move toward 1551. Consolidation below 1507 level would allow traders to expect a continued decline toward the next Fibonacci retracement level of 50%. 1.1472. The wave structure on the hourly chart has turned bullish. The latest completed downward wave broke below the previous low, but the latest upward wave also broke the previous high. The geopolitical backdrop remains consistently negative, as Iran and the United States continue their blockade of the Strait of Hormuz, while no negotiations are currently taking place. Traders had been expecting support from the Federal Reserve for about a month, but those hopes were not fulfilled last week. After a prolonged pause, the bulls have resumed their advance. On the 4-hour chart, the pair consolidated above the downward trend channel, suggesting not just a bullish attempt, but the beginning of a sustained bullish trend. Consolidation above the 76% Fibonacci retracement level at 1514 would increase the likelihood of continued growth toward the 61% Fibonacci retracement level at 1578. No emergent divergences are currently visible on any of the indicators. And we're starting with pound sterling dollar pair with Din Lao. On the hourly chart, August 3, the GBPUSD pair reversed in favor of the US dollar on Monday, and consolidated below 34.58 level. As a result, the decline may continue today toward the next Fibonacci retracement level at 38%, 1.3397. A rebound from 33.97 would favor the pound and support a moderate recovery toward 34.54, 34.58 level. Consolidation below 33.97 level would increase the likelihood of a further decline toward the next Fibonacci retracement level of 50%, 1.3348. The wave structure remains bearish. The latest completed downward wave broke below the previous low, while the latest upward wave failed to break above the previous high. Therefore, the bears still hold the initiative in the market, although they could lose it in the near term. The bearish impulse that began in 2026 has already been completed, and only geopolitical developments could prevent the bulls from continuing their advance. However, the geopolitical backdrop remains mixed. On the 4-hour chart, the GBPUSD pair advanced to the 34.67-34.82 resistance level before rebounding from it. This rejection suggests a decline toward the 50% Fibonacci retracement level at 34.09, which is exactly what we're currently observing. A rebound from the 34.09 level would favor the pound and a resumption of the upward move. No emergent divergences are currently visible on any of the indicators. That's all for today. See you online soon.